Hey, what's going on, team? It's Ricky with TechBud Solutions, and as the stock market is pulling on back, a question that everyone is asking is now the best time to buy, right? I think, again, I'm going to be sharing my experience, and let me know in the comments section what you think about this approach. A lot of people, a very traditional way is just always buy the dip, right? But like you guys have seen before, if you have any experience in the stock market, when you buy the dip, it doesn't necessarily mean it's going to recover right away. So sometimes you put yourself in an uncomfortable situation, and for beginners, it's positions and situations that you can't really tolerate. So I hope that this video gets you one step closer to your overall goal. If it does, and you agree with what we shared in this video, I hope that you can drop a thumbs up if you feel like we earned it, and consider subscribing. As well as, I'm not going to be using any specific stock, as there's so many people that are going to be watching this video. And one of the things that we always want to encourage you to do is to be your own person. We all see value in different ways, and we all invest in different ways. That's besides the point, right? In what stock you see value in, that's on you. But I think that with these 3 stages of a reversal, which is something that we've shared within our Learn Plan Profit group, it has at least allowed us to be able to put ourselves in a position in which that we are more likely to succeed. And let's be honest, right? Not every trade or investment goes according to plan, but I hope that with this video, it just gets you a little bit closer, or at least in a position to succeed as well. So what do we mean by the 3 stages of a reversal? One of the things that you might be experiencing is, as you're watching this video, what is the current stock market doing? The current tech market is selling off. And why not just go all in right now, right? Well, we don't know if the market's going to continue to sell off. So do you really want to buy the dip on something that might continue what it's doing in the past, right? And that's continuously go down. So let's say, again, just an example, you have $10,000 in your account. It doesn't actually matter if you have $1,000, $100, or $100,000. It's the idea. So we're going to be using percentages as an example or as a reference in this video. So one of the things that we have shared so many times before is with the 3 stages of a reversal, I'm going to be dividing these parts into 3 sections, right? There's the rejection phase. So what does that mean? Well, it's pretty much the stage that we are currently at as of right now. The market is currently selling off, meaning that, do I really want to go all in when it's selling off? Or do I want to wait for some form of consolidation, some indication that, hey, there might be a support level here and it might actually begin to recover, right? Like we've said so many times before, confirmation is key. And there's no such thing as a perfect support level that always acts as a support, but at least it's a better indication that the stock or the market is trying to stop selling off. And that's the whole idea, right? You want to put your money in something that is actually making you money, not something that is only going to continue to sell off, right? And this intention is for long-term plays, for investments, not necessarily day trades, right? So this is the rejection phase. This is what we call stage 1. In this stage, if you are experienced, if you're a beginner, again, please make sure that you understand that position that you are in. The way that I personally would approach stage number 1 is either not buy in at all, so 0% invested if the market is still aggressively selling out. Who's the 0%? The 0% are the people that can't tolerate pullbacks. That's not to call anyone out. It's just based off of experience level. You're right. When I was a beginner and I have no experience, it's difficult for me to go into a position knowing that it could still sell off. I'm just not experienced enough to be okay with that. And that's okay, right? We're all in different levels. Versus someone that might have experience and might just want to get some skin in the game. But are you going to go in with the full $10,000? No, I put 10%. So if I go in, if I have $10,000 in my account, again, just an example, and I go in with 10%, what does that do for me? That allows me to have enough skin in the game that I feel motivated to follow up with it. But guess what? Like we've seen for the past couple of days, if the market continues to sell off, it's not going to put me in an uncomfortable situation because I did it in a tasteful manner. I put myself in a position in which I can succeed in. And it doesn't mean that it has to play out perfectly, but guess what? It's going to be a lot easier. And you answer this in the comment section. How many times have you gone all in when you buy the dip and it begins to sell off and you freeze, you hesitate? Why? Because you're so emotionally inclined in that position. You're just like, oh my God, I can't tolerate this. I'm not okay with the market selling off when I'm fully invested. I can't buy the dip or buy the dip even lower because it's still selling off and I'm all in. So with this tasteful position, again, it's just an idea, it's just a percentage. You can formulate your own percentage. You do it in a tasteful manner that puts you in a position to succeed. So if it continues to sell off, yeah, it sucks. You have $1,000 or 10% of your account in something, but you did it in a tasteful manner that you're less likely to hesitate to cut losses, right? Because you have less money on the line, and or you can tolerate it. So if it drops another 5%, then who cares? Because you did it with a position of only 10% of your overall account size, so the dollar amount at risk is much less. Let me know what you think about that in the comment section. The second, right, is the consolidation stage. You've seen this so many times, right? Especially if you love trading reversals. It's one of my favorite patterns to trade, and again, that's just my opinion. But this is when it begins to formulate a support. In very simple terms, it's when it no longer continues to sell off. And what this begins to indicate is not that it has to recover right away, and this is stage number 2. And this is actually indicating signs of a potential support level. So with that, I can maybe gain a little bit more confidence to maybe begin to add more to my position size, or maybe take my first position, right? So on this one, I'm going to say anywhere from 10% to 20% is when it would make a little bit more sense, because there's actual indication of a potential support level that, hey, we might be finding a support level here. It might be getting ready to begin to indicate signs of an uptrend, but we still don't know 100%. So you still have to be careful. Your risk management still has to be in place. And if you're an absolute beginner, then again, you might want to be closer to the 0 to 10% even during this stage, because if you can't tolerate pullbacks, then don't put yourself in a position to fail, right? Especially when we definitely don't have confirmation of a reversal. Consolidation does not mean confirmation. What is confirmation? Well, when it does the exact opposite of this. When a stock sells off, I mean, hopefully, it doesn't just dump right away, right? It sells off, it tries to recover, it gets rejected, it makes lower highs, and it sells right back off again. So we want to see the exact opposite during the confirmation, and this is the third stage. This is the most important stage, and think about this. How many times have you waited for rejection, consolidation, and confirmation? It takes patience, right? It takes patience to effectively invest in this market. And I'm not perfect. I make mistakes all the time. I get very impatient sometimes, and I might go in a little bit too aggressive there, or I might go in a little bit too aggressive with the second stage. But the idea with this is, as you're learning how to do something, focus on the learning part, not so much on the making money, and do it with a dollar amount in which you can tolerate. So if you can see, if you begin to test these 3 stages out, you'll begin to understand what you work well with and what you don't. Maybe you're someone that only wants to buy on the 3rd stage, maybe the 2nd stage, or maybe you're okay because you have a higher risk tolerance that you might want to buy on the 1st stage. You know, there's no perfect way on approaching the market. There's so many different ways. Just make sure that you understand that and that you at least learn from your mistakes. So the 3rd stage pretty much means that we begin to indicate signs of an overall uptrend. This is when we actually begin to no longer sell off, right? No longer sell off, no longer consolidate, but wherever this consolidation was, we actually begin to indicate signs of an uptrend. On the very traditional route, what this means is, you know, on the 180-day, 4-hour time frame, it's when it begins to break above the EMA line and formulate higher highs. The EMA line would be something along the lines of this, and when it pulls back, the EMA line acts as a support. It picks back up, it pulls on back, the EMA line acts as a support. Essentially the exact opposite of when the EMA line is acting as a resistance. And if you have experience in the market, you probably know exactly what it is that I'm talking about. And during this stage, does it mean that you go all in? Again, it's all dependent on your risk tolerance. The way that I like to do it is, again, the word that we're going to be using is a tasteful way. A tasteful way to average up is once it's actually beginning to indicate signs of an uptrend, what's the whole purpose that we're in the stock market for? The whole purpose is to put our money in stocks, invest money in stocks, right, that are indicating signs of an uptrend. Why? Because we want to put our money in something that will make us more money, that is showing signs of growth. So wouldn't it make sense to wait for confirmation to indicate signs of an uptrend, to actually wait for the opportunity to present itself, to put ourselves in a position to succeed? It's not so much always about what stocks you buy, but more often than not, the time that you decide to buy them and when it actually makes sense. Let me know if you think that you agree. Once it actually begins to indicate signs of an uptrend, the way that I would personally approach this is, again, dependent on your risk tolerance, this is when I would begin to average up into this position. So anywhere from 20%, and as it continues to indicate signs of an uptrend, then that's when you can scale into, overall 100%, or even if, because you're just getting started and you're still learning how to trade, then guess what? If you don't ever want to go in 100%, meaning that if you have $10,000, if you don't ever want to go in with the full $10,000 because you're just getting started, or even $1,000 and you're just getting started, I think that's an amazing way to approach the market. It's not so much about when you're getting started and how aggressive you approach it, but if you really think about it, if you put yourself in a position to succeed and you really take into consideration your position size and you do it in a tasteful manner, you have nothing but time to make money in the market. You have nothing but time to scale. Ask yourself this simple question. Are you trading right now or investing right now what you think you will have 5 or 10 years from now? No, because you're a beginner, you're just getting started, and you barely, if anything, have any experience. But with everything, right, when it comes down to scaling and experience and what you can tolerate, you're bound to begin to trade with more and invest with more down the road. So why are you trying to make it or break it right now? So never be encouraged to put yourself in a position to fail just because others are doing it. Who cares? Do it in a tasteful manner. So again, being able to wait for proper indication of an uptrend. People love to ask, when is it the right time to buy? This is something that you can test out. One of the things that I like to look for is, as we're indicating signs of an uptrend, when it pulls back and it validates the EMA line as a support, and it pulls on back, validates it as a support, and begins to indicate signs of an uptrend, then that's when I can load up on it 5-10% incrementally. As long as it stays true to this reversal and it continues to indicate signs of an uptrend, then that's when I can continue to load up on it. And then once we approach the previous resistance level or indicate any signs of a resistance level where, again, patterns tend to repeat themselves, they don't always have to, but if we actually begin to break below EMA, maybe we don't get all the way to the previous resistance level, whatever the case might be, never be afraid to lock in profits. I can't stress that enough. People love to, and we joke around about it all the time, and trust me, I get it. Diamond hands, paper hands, they can come up with any name, right? We've talked about it within the LPP group. You can call me poop hands at the end of the day. But guess what? If you lock in profits, there's nothing wrong with keeping some of those profits in your pocket, especially as you're learning how to do something. Think about that. What a beautiful time to be alive, where you're learning how to do something and making money during that process. It's the best of both worlds. So why would you be so eager to lock in profits when you're not trading or investing with the dollar amount that you can be down the road? You're almost not doing your future self a favor by approaching it in such an aggressive way. Let me know if you agree, right? There's so many different ways on how to do well in this market. This is just one of many ways. Though my whole focus for this video is, now as the market is pulling on back, this is the time that it makes the most sense for me to begin to load up on positions. This is the time that it makes the most sense to create an effective watch list of stocks that I want to invest in long term, because they're all discounted. Not when they're at 180-day highs, not when they're at all-time highs, not when everyone else is buying and investing into them. There's no margin then. But while everyone is freaking out and the market's pulling on back, then guess what? If you're not fully invested, if you're not invested at all, it's like a sale. If you actually think about it big picture, it's like a sale. And again, it doesn't mean that you have to go all in right away just because it's cheap. Oversold, meaning that it's cheap, doesn't mean that it's a good buy, because it could continue to sell off. So what can you do? Approach it in a tasteful manner. So again, these are the 3 stages of a reversal. Position size is so important. And my goal with this video, again, is by watching your position size and effectively investing in the stocks that you see value in, that it will be that much easier for you to lock in profits when you do it with a tasteful position size. Or worst comes to worst, it's part of the process. If you have to cut losses, but you do it with a much smaller position size, I just hope that it's a little bit easier for you. So let me know in the comment section what you guys agree. I hope that it earned your thumbs up. And as the market is selling off, I would love to know, what stocks are you watching right now? If you were to pick 3 stocks that you were to invest in for the next 5 years, what would those be? I'd love to learn a little bit more about them, and hey, maybe I'll even invest into them as well. I appreciate your time. Hope we earned your thumbs up. Don't forget to subscribe to the YouTube channel, and like always, make sure you stay connected. Join our free Facebook group, and that's that first link down below. And if you guys like the way that I broke things down today, just know that I exclusively work with the Learn Plan Profit group. I trade live every single morning, and I answer your questions in real time. There's no question that the market is always changing, and it's not that it is necessary to take and make moves every single day, but it's so cool to be able to surround yourself with people that are doing it on a daily basis, and to know that every day at market open, I'm right there for you. So again, click the second link down below to learn a little bit more about the Learn Plan Profit group and see if it's a good fit for you. Like always, let's make sure that we end the year on a green note. Take it easy, team.